Welcome to Markets Now. I'm Michelle Rourke with Kooima Kooima Varilek. The grain seeing some early pressure. Soybeans did try to come back to plus side status a little bit this morning, but have since pushed back lower. Over in the livestock, we're mixed to higher in the cattle, lower in hogs. And Brad, thanks for being with us. Let's talk about the cattle market. First of all, we had an up week last week, a higher weekly close, but we did a little bit of technical damage at the end of the week. So talk about what we need to do in this market from a futures perspective to keep moving higher.
All right. Thanks, Michelle, for having me on. What a way to start a Monday morning here again, huh? Got to try to talk smart. The technical thing that you mentioned, there's a couple of things here technically. I think probably we're going on 3 weeks at least of talking about a market that is overbought. In other words, one that has gone up quicker than what's normal. It's a math equation. It has nothing to do with anything else. It's a very objective, things like stochastics and things like that. So we've been in that, looking for, waiting for, seeing if we can get a correction. Friday's action, now, while it wasn't wild, but we did, like in October and December, cattle both had a new high for the move and then closed lower. So, the weak reversal, but a reversal nonetheless. So the thing about a reversal, technical reversal, at least that's the way they taught me 40 some years ago, was it had to be from a terminal area, in other words, or an important area. Well, new highs for the move, that's an important area, right? It should be a big volume. Our volume was not particularly big, and the open interest actually didn't do much of anything either. It actually went down a little bit. And then the third thing is it needs to have follow through. So, for that reversal Friday to mean anything, at the very least, we would need to be lower today. And it's not, for the most part, but it's early, right? So, first time we've had one of these little wobbles in a little while. I know a lot of us, that have been kind of laying for a little bit of a correction, thinking actually would be kind of healthy for the market, to get a $2 or $3 correction, which I guess I think that maybe is the next play here. I'm not bearish. It just seems to me like maybe the market is feeling like it needs another reason, right? Now we've got futures actually above cash, and to recruit that long speculator now might be a little harder work than it would have been when we were trading at a discount to cash.
Yeah, I was going to ask you, that's the first time we've seen the futures move premium to cash for a very, very long time. Cash trade up slightly last week for the fifth week. So will cash be higher again this week or not?
It's a great question. And the whole thing you brought up is, to me, is at the risk of, you're asking a drink for a drink, and I'm going to get out my, fire hose here again. I'm sorry, but this whole relationship between futures and cash is very different than what it's been. To answer your question on cash, I think steady, maybe steady firm. The South was solidly $1 higher last week, and caught up with us in the North. The North was, I don't know, unevenly steady. I got 188 on a few. I got 187 on some, which was about steady. It felt like it was a little harder to get last week than it was the week before, but that's a subjective answer. So it feels to me like you've got a couple of the Packers at least close enough to the knife, and you also have a situation here in the North where the easy phrase here, the commodity broker phrase is, well, there's not enough cattle to break it, and I got to be careful saying things like that, but there is not a big supply of cattle. There's not a big supply of big cattle at all, which typically would be the case in October, long-fed calf, of calf feds. So we've done a really nice job up to this point of staying very current, which has made all of the difference. Now, whether we can continue to do that, I guess I'm trying to encourage, but us all to remember that let's not get caught up in the idea that if the futures are $1 over cash, that somehow that's a reason for me to stay and fight the market. The Packer wants to get his leverage back. Look at what he's doing with the kill. Friday's kill was pretty small, 106. So I guess I'll go with steady, better cash. I'm a little uncomfortable with futures being premium to cash, but we can change that real quick. We can put $2 on the cash, and that would solve it. So we'll see. But I'm a little more of a. You can tell I'm in a little more of a. I got the clutch in here a little bit for a second. I'm just a little more cautious than I was the last several weeks.
Yeah, and now you have the North and the South both trading at that 187 level there, and the North had been premium for so long. We've got Packers moving cattle around to different plants, don't we, from north to south and south to north?
Yeah, no, Depends, when you talk around, which I do, I talk to some of my friends in the South, and they said to me, well, yeah, the perception is you guys are the only ones that have a lot of cattle. And I'm going like, not so much. I don't think we have a lot of cattle at all, but maybe we have more grade, maybe we have more quality. I know of cattle that from this area that got exported to Kansas, Wisconsin, Illinois. Last week, so that's not bearish in my opinion. When they're scrambling and willing to pay big freight bills to move cattle, which might have part of the reason why the South has caught up to us too, just because of the freight cost of moving cattle that far. So I think the guts of the market are still in fantastic shape. Let's just make sure we stay nice and current so we can maintain that leverage.
Yeah, and we're seeing maybe some of that currentness show up in the fact that weights are dropping for the first time in a long time.
How about a moment of silence? The weights finally down 4 pounds. The one I always write down is the steer and heifer carcass, the data that comes out on Thursday, which is comprehensive of all of them. Down 4 from a week ago, still 21 over a year ago, but we were 30 plus over a year ago for a long time. So, I don't know what to say. This weight thing might be just a thing that we're going to have to get adjusted to. The only way you're going to increase beef production is by having more weights because there's less cattle. And there's no way that's going to change here in a little while either in terms of the overall cattle supply. So the weights might be something that we might just have to contend with. But I'd love to see the weights come down. And as we get closer to weather, winter and stuff like that, that'll make it happen just by nature. But anyway, it's good to see the weights come down a little bit. At least we're trending in the right direction for now.
Yeah, let's stay current. We don't want a debacle like we had last October or in 2015, right? That's still fresh on people's minds, apparently.
From my side of the desk, Michelle, it's very fresh on people's minds. And, I can show you my scar, right? So I think, the October report last year, of course, was a very big surprise on the placements, triggered an $18 sell-off, yada, yada. But I think even the 2015 probably carries harsher memories for the producer, where I've had so many people, even when I talk to cow-calf guys, they'll say to me, I'm not going to let 2015 happen to me again. If you got youngsters watching the show, 14, we had a bull market of our career until this one, and only to be followed by a sell-off that started the third week of May in 2015 and lasted until December of 2016. And a lot, the pit closed. I'm sure that was, I believe strongly that was part of the problem. We went to an all algorithmic trading, and the trading was different. And it still is. But we also started to fight the market with high break evens, and we fought it, and got cattle as big as a house, and we lost all of our leverage. So on the one hand, I think it's good to remember that, because I think maybe it'll help us to avoid doing that again. But on the other hand, that's also a reason why you got, for instance, you've got next, I don't know, like Feb cattle, which typically is a real high time, trading at 188, basically on par with what today's cash is. Most normal years, February would be 4, 5, 6, 7 over what cash is in October. So still some good things happening, and I think it's hard. How can you blame somebody from remembering those sorts of things? I remember them as well.
No doubt. All right, the hog market's seeing a little break this morning, but it seems like every time we get a break, it gets bought. It has been a very resilient market. The funds are long, like 71,000 contracts. How much farther do they push this thing?
Be the first to admit that the hogs continue to maintain more strength than I was expecting they were going to. We are coming up on a seasonal now, and typically we top, but the seasonals haven't worked forever on that market, especially. Funds can make water run uphill, make an ostrich fly. But I used to have a deal taped to my phone. There's a paddle big enough to fit everyone's rear end. Different phrase maybe, but at some point these funds do have to come out. And even if they aren't coming out because of a bad looking chart, for instance, even the Decembers have to start coming out there the first part of November. So to me, the hog thing feels like it's kind of on thin ice here after this big of a rally. Certainly they've been helped by this cattle rally too, of course, but I would say the expectation for me here anyway would be, maybe we break back to the $73 level on December hogs and then see how we feel from there.
And the grain seeing some pressure this morning. Obviously, South American weather and these rains that they're supposed to receive are right in target here, and harvest pressure is also part of this, isn't it?
Yeah, and no help from the report. I mean, nothing that was particularly, to stop I'm nothing bullish. It wasn't overtly bearish either, but it was kind of one of those little reminders again that, oh geez, we're not going to run out. Look at the carry out. I think you had a couple things in play. Well, number one is the South American weather, I think, but the other thing I think is a reality that we've got a big harvest. The crop, whether it's as big quite as what they think, and I don't think the bean crop's quite as big as they think either, but who knows how long it'll take to figure that out. The reality is you probably got a farmer that's incentivized to probably sell grain, and because of the interest rate and the cost to carry it. And, so I just feel like you're going to have a little more time here with some harvest pressure. I don't think we have to take out the lows. I just don't think we've got enough gas in the tank here or a reason, to step in front of it now that we've taken that weather risk, at least for now, out of the South American weather. But that's a long growing season. One robin doesn't make it spring. One rain shower there doesn't fix their crop either. So we've probably got some chances there that will get some help again later on. But for now, I'm afraid the Bears got a little bit of leverage.
All right, let's hope we can hold the support areas, especially $10 on the November beans. That's a little vulnerable. All right, thanks so much, Brad Kooima with Kooima Kooima Varilek. That is Markets Now.